Hello and welcome to the Market Outlook webinar. If you're watching the recorded version of this, it was held live on Wednesday, the 17th of August at 12:30 in the afternoon. This is one that we run every week. We won't be doing it next week, but we'll resume normally again from beginning of September. I just put the risk warning up there for you to read, and it's really just to look at maybe some of the markets that could be interesting over the next week or so. And I think even though it's sort of the summer doldrums, there's still quite a bit going on. We saw the pound rally quite a bit over the last 24 hours. So we'll take a look at that, and maybe it's a sign that one's starting to turn the corner. So we'll have a look at that in a bit more detail. But there's all sorts of stuff, levels to keep an eye on, I think both short and long term in a mix of different markets. So without further ado, let's get into it. So let's start off actually for a change. Let's look at something really long term. I've talked about this a bit in the past. This is the Aussie dollar, US dollar. So let's just take this out. Do you want to look at the dailies maybe? It's had a good run over the last 3 months or so. We've seen Aussie dollar come from these lows up to where it is now, back up to the highs for the year. And I think it's always an interesting one to keep an eye on. You know, it's very much a commodity-driven currency, you know, as is the Australian economy. And what I've done now, I've flipped this over to a weekly chart. And you can see it sort of does put into context, I think, maybe the strength we've seen this year in the Aussie. There have been some really good moves in the Australian dollar, US dollar, and it's bringing us back to what has been a pretty significant level, you know, going back to those highs from April 2013, so more than 3 years ago, these highs up here. And the market since then has been in decline. You know, like as with all declines, we've seen the odd, it will bounce along the way. And it's interesting to see how this plays out, I think, over the next couple of weeks. Because if you looked at it, you know, in isolation, just over the last year or so, you know, we've seen a good recovery, but we're back up to what has been a big level. We're back to the downtrend line. So it's really make or break time. I don't think there's any urgency to do anything today on Aussie dollar. I wouldn't be a seller maybe today, but I think it's going to be interesting to see how this whole 7,800 area plays out. You know, we saw that the highs earlier this year were just a little bit shy of those at the moment, but I think it's a really interesting one to watch. And if we do see some sort of sustained push through 7,800 on the Aussie dollar, US dollar, it does suggest we're seeing, you know, quite possibly the start of a major trend reversal. So we'll come back to this one over the next couple of weeks, but I do think it's an interesting one to keep an eye on, to see what happens up here. And of course, you know, when trends reverse, they can offer great trading opportunities in terms of risk versus reward. This is the daily chart I've flipped it over to now, and you can see the highs from earlier in the year around about 78.30. So what's that? A couple of 100 points higher than where we are now. So I think it's going to be a really interesting level to keep an eye on. Let's see what happens. You know, the trend is most definitely, you know, still up from now, from these May lows, you know, sort of down here. You know, we've still got our good uptrend in place. So I think it's interesting to see what happens. I'd still be inclined, I think, actually no, I would. I'd still be inclined to be a buyer on dips of the Aussie dollar for now. You know, even though that major downtrend is coming in, I think if we saw, you know, much more weakness from here and then a bit of strength, I'd be looking to be a buyer and looking for a retest of this 78.26 level. I think it's only if we lose, well, let's say 7,400, the lows from early July, that I think it does start to look like this uptrend is running out of steam. But I think for maybe those who are of a slightly more longer term bias in markets, I think it's an interesting one to keep an eye on, the Aussie dollar, and we'll keep coming back to this over the next few weeks to see how things pan out. But a big level to watch up there. Now, going completely the opposite way and taking a really short-term view, let's just have a look at the pound. So pound US dollar. If you've been on these webinars before, you'll have heard me mention in the past how important I think the previous day's high and low is. And if we look at pound US dollar, you know, over the last 24 hours, it's broken some big levels. Maybe we'll see it clearer if I flip over to an hourly chart. So it had been weak. There we go. So we've got this. This is what the last 2 or 3 weeks, pound US dollar, and we had this, we had this steady decline. That was the move, I think, on the Bank of England rate decision, beginning of the month. So this crazy move. Then this big move here. That's on the payrolls from the first Friday of the month, and the market has continued to edge lower. But if I just flip it out to a daily first of all, and then talk about what's happened over the last couple of days, this has been the move in August. But it has, so far anyway, the move we've seen over the last 24 hours, it has held above these sort of post-Brexit lows, those 30-year lows for pound US dollar. So I think it's interesting, are we seeing, I don't think we're going to be threatening 150 anytime soon, but I think it's interesting that are we seeing a level in the past where people thought, well, hang on a second, the pound has dropped a little bit too far here. Are we seeing that level come back into play again? It's early days, but I think it's an interesting level of support down here, pound against the dollar. Let me just flip back to an hourly chart. So the move I was talking about, I was out yesterday, so I wasn't really watching it yesterday, but I think it's interesting. It's an interesting one now because we'd seen, the classic procession of lower highs, lower lows. So as a trend follower, as a technical analyst, the approach really is to be a seller of any strength. And you could argue that's still very much the case. But what's making me think, well, maybe we could see something of a pound rally for the rest of the month is the fact that yesterday's move, it took out the highs from the day before, and it also took out the highs from the end of last week as well, sort of 30-30, those sort of highs. So we broke some big levels yesterday on the way back up. When we pushed back overnight, it was about midnight, pushed back to levels not seen for around about a week or so. But before we get maybe too carried away, I think we need to bear in mind, I put this on Twitter this morning, just how much of a barrier, can I draw it in there? Let me just draw a horizontal. How much of a barrier this sort of 130-100-ish level is. So I think if you wanted to get sort of really bullish on the pound against the dollar, short to medium term, we'd want to see a break of 130-100, and then I think we can start saying, well, maybe we're going to see a run back up to these sort of pre-interest rate cut highs, up in the 13300s. But I think it's interesting to see how it performs for the rest of the afternoon. I have put a trade on this. I put a trade in this basically for it to go nowhere for the rest of today. So I think after maybe the excitement of yesterday, we had those UK unemployment numbers out this morning, and I think they showed unemployment had dropped again. I'm betting on something of a choppy day this afternoon as the market just does nothing, really. We've had the excitement of yesterday, we've had the numbers out this morning, so a fairly flat afternoon. So if it finishes around about 130.20, I'll be happy. But let's see what happens. But I think there are some levels to watch. If we see, let's see what was going on before the break. If we see what was happening yesterday, we saw the rally yesterday. This is from 8 o'clock. So during the European session yesterday, rally up. A little bit of chop in the afternoon, but 129.40 held any weakness. So if it does sell off over the next day or so, I'd definitely be watching this 129.40 to 129.80 area to see what happens. So I just think it's always interesting. I think when something breaks the previous day's high or low, for short-term traders, it does suggest there has been a short-term change in sentiment. Don't get me wrong, it doesn't work all the time, but the sort of move we saw yesterday, what was it? It was a couple of 100-point move yesterday, 2 cents in the pound against the dollar. Let's see what happens, but I think there are some levels to keep an eye on, and I think that the big immediate level are those 130-100 highs. If it breaks there, I would definitely be in sort of buying the dip mode, pound against the US dollar. And I'm also going on holiday to America on Saturday, so I could really do with a massive rally in the pound against the dollar to make everything a bit cheaper. But let's see what happens. 131, I think, is the level to watch, and let's see if we see some support coming in this afternoon ahead of those lows if it does drift off back to there. So it's an interesting one, I think, and also because of the bigger picture, because clearly the pound got clobbered on the Brexit vote, but we did see some stability coming in ahead of 128. Are we seeing a similar thing happen again? I don't know, but I think it's an interesting one to watch over the next few days or so. Okay, let's have a look at euro dollar. Let's bring that one up. Here we go. So I think for euro dollar, I've been positive for a while on euro dollar, and I think what we've seen again in the last, say the last few. Let's flip this out to a daily. We've seen something of a recovery in euro dollar. Since the old. This is a really big picture one. This is the massive declines we saw in the euro against the dollar from 2014. And I think for a lot of last year, you could argue what we were seeing was something of a basing pattern, I think, for euro dollar. It went sort of broadly nowhere from March last year, but we did see the dips being bought. Okay, so this is like the bigger picture. And let's have a look at maybe something a bit more short term, the daily charts for this year. So let's just get my zoom in right. There we go. So there's the Brexit move again. So the sharp sell-off from 140 down to about 110. So sizable decline on the Brexit vote. But you can see this sort of retest idea again. When we were talking about it with pound against the US dollar over the last couple of days, coming back down to a previous low and strength. We saw that a lot earlier in the euro. So early July, we saw that the market pushed higher. The fact that beginning of August, it broke out through this previous high as a positive, dipped back, hasn't got anywhere near these previous lows, and bang, we're up here again. So I think that does build, I think short to medium term, a positive argument for euro dollar. I think maybe the immediate hurdle, again, just looking at levels, you can see what a problem 114 was. So someone's saying it's euro going back to the 2014 highs. Maybe eventually, maybe during our lifetime, we'll see 140 euro dollar again. But I think maybe the more immediate one is the 114 level. And I think like the pound against the dollar, let's not get too carried away with how positive this could be. But it's it's pretty clear, I think, over the last 2 to 3 weeks, which way the trend has been in euro dollar. And I was trading it last week, and as ever, I got out too early, so I'm not in it at the moment. But based on, there we go, there's the hourly chart, and in the best habits of Blue Peter, here's one I prepared earlier. So there's there's our trend for euro dollar since the 5th of August. So we're a week and a half into this. You can see how it's accelerated. And for me, if we did see a sell-off, there's a lot of support, on the hourly charts, running from 111 sort of levels down here, 111.60 levels. So if we did see, 100-point-ish decline from here, I'd still be looking for the buying opportunity. I do think the story for the rest of this year could well be for the euro to gain ground. Famous last words. So let's see. Let's see what happens. One other FX pair, and again is interesting, I think, sort of over a few different time frames, is dollar yen. I think we did this ages, well, not ages ago, maybe about 6 weeks ago. But dollar yen, the big. There we go. The big, we'd had this big. Actually, let's make it a daily chart, and then zoom out. We've seen this massive. There we go. Perfect. I remember we were doing a webinar back here, so it would have been the middle of July, and we'd seen dollar yen spike lower, and then rally back up, and we were watching it, I think, near to this trend line. And it's been almost textbook. We've had this decline in the dollar against the Japanese yen now on this particular chart for all of this year. We have, again, had the odd rally along the way, but the rallies haven't lasted. And the one we saw during July was a similar sort of thing. So really, the textbook approach now is to wait to see if we get a bit of strength again up to, maybe this sort of area, and look to be a seller. And that's true. That is the textbook approach. But maybe for those of us who like to break the rules now and again, we could see this level come into play. And it's been a really important sort of, and I think things like spiky lows, I think, are always interesting, where you see the market move to a level, then move sharply back, and for dollar yen, the lows were down here ahead of 98. And again, we saw middle of July ahead of 99. And again, over the last week, we have spiked below there, but we've rallied back up. And it does make me wonder, could we see something, if we flip over to the hourlies, could we see something of a push by dollar yen, off these sort of levels? That's a level it did push below. Again, I wouldn't necessarily be in a hurry to be a buyer just down here. But I think, if we flip it back to the daily chart, we could see something of, I think there's a reasonable chance of a 200 to 300 point rally from here on dollar yen. And the aggressive way of trading it, aggressive for me anyway, would be a stop below yesterday's low, which is still going to be, some way away from where we are now. That is a long way. That's still 130 points away from where we are now. So maybe the perfect setup would be something of a sell-off over the next couple of days, see if this level holds, then start targeting a move maybe back up to 102.60. But I think it's important, not to lose sight of the fact that the pure approach is really to sit on your hands with dollar yen and be a seller into strength if we get it back up to that downtrend. But I think because this level has been rejected quite a few times in the market, and I do think it's interesting down here around 100 for dollar yen. But really, I think that the FX pair I'll be watching the closest is going to be that pound against the US dollar. Based on the strength we saw yesterday, the fact that a couple of days ago we saw the retest. No, it's not a pure retest, but it came close enough to these post-Brexit lows. So it'll be interesting to see what happens there. So the immediate one to watch for me, pound against the dollar. But dollar yen is interesting to see what happens. And then of course the big picture one is Aussie dollar, US dollar. Right, let's leave the currencies to one side for a moment and let's take a look at some of the indices. I think the DAX is interesting. they're all going up. They're all making, well, they're not all, but the US markets made all-time highs again earlier this week, I think it was, or maybe it was the end of last week. But the DAX is an interesting one. We mentioned this, I think it was last week I mentioned this, where we've seen this big level in the DAX, the highs for the year, around about 10,500 on the DAX, the German 30. And the market, again, since the Brexit, has rallied more than 1,000 points through that level. It broke it beginning of August, second week of August. It's pushed higher. It spent 1, 2, 3, 4, 5, 6, 7, a good week and a half, good trading week and a half above that level. So for me, that does suggest that's a valid breakout. And when we get breakouts like that, again, it's another suggestion that maybe we're seeing a big shift in sentiment. So for me, looking, based off the daily charts, the sort of default position in the DAX would be to look to be a buyer. The question is, as ever, how far is the market going to sell off? If it dipped back below here, these August lows, I might be less inclined to believe the breakout. But for me, looking at it there, you think, well, actually, I do want to be a buyer on dips. So let's take a look. Let's just take it sort of one step in and have a look on the hourly charts. There we go. There's our, what's that? Is that back? That is back to virtually the start of the rally, isn't it? I've got a bit of a dodgy mouse here, which doesn't seem to like. It seems to be wandering all over the place. I think it's batteries. So let's plonk our our trend line, something like that. Oh, shaky hands. There we go. So there's you could argue that that's the trend off near enough off the July lows. So I think we've got. I'm not a massive fan of looking just at the trend line. I'm more of a fan of looking at sort of previous highs and lows. And we do have these levels just from, what is it, just over a week ago, isn't it? Around about 10,400-ish level. So it's only 160 points below where we are now. And if you ever trade the DAX, I'm sure 160 points can be done very quickly. So I think the 10,400 level on the hourly charts is an interesting one to watch, following that breakout on the daily charts through that big level. So for me, I would definitely be expecting the strength to come back in at some point, the market to turn around and have a run back up to sort of 10,800. So for me, I'd still be looking to be a buyer of this weakness. The only question is, as usual, how far is the weakness going to go? Where's my stop going to go? And all those sort of things. It's still weak today. Don't get me wrong. We've broken below the lows from yesterday. That's never a good sign in the short term, at least. But let's see what happens. I'll be inclined again to keep an eye on it and see if we see some strength coming back in for the DAX over the next few days. But 10,400 would probably be the big level I'd be keeping an eye on. Yeah, you won't be surprised to hear it's a similar sort of picture for the other markets as well. Clearly, because these markets do tend to well, they do move together, don't they? Stock market indices. Let's have a look at the Dow. Let's have a look at this. I'm sure there have been plenty of fingers burnt, trying to call the top in US markets. But you can see there, what's that, the last 3 years or so. You can see, the breakthrough, or 18,300 was a big one for the Dow, out to all-time highs. I would not be inclined to stay short for very long, looking at these markets, because the trend has been so strong. But let's have a flip over and have a look at the hourlies, because again, like the DAX, recent days, we've seen it lose ground. That was all-time highs on the 15th of August. So it's only a couple of days ago. The Dow set fresh all-time highs, and the default position again, should be to be a buyer, a buyer of any weakness. And I think, like the DAX, I think there's an obvious level to keep an eye on the Dow, and for me it's these lows from just over a week ago, around about 18,450. It dibbled around that 18,500 level for a while, didn't it? But 18,450 is maybe the one to watch. So I would be, for me, I would be expecting the Dow to to snap back and go back and have a look at those all-time highs again. So again, if we plonked our excuse me, our trend line on here, we should probably take it from that low there. We're going to be all textbook about it. There we go. You could argue, has it broken the trends? If I drew into that, it didn't. But this is the problem with trend lines, isn't it? So subjective. There we go. Perfect. So it's moved away from the trend line. We've become a bit overbought. The market sold off. Let's put an indicator on this. I'm normally not a massive fan of lots of indicators, but let's put a relative strength index on there. There we go. So actually, if you were following the RSI, let me change that to a 10 RSI. There we go. There's an argument for buying now. I'm not a fan really of just using overbought, oversold, and using it blindly and trading off it, because as I'm sure there's plenty of overbought, oversold indicators will give you a signal to sell often far too early. Yeah, they'll get you to go against the trend far too early. But I think what is worthy of note is the idea of divergence. When a market, here's a good example, a market hits a low, RSI hits a low, market rallies, comes back, hits roughly the same low, but the RSI is making a higher low. So in this example here, this is where the RSI has started trending higher, even though the market hasn't yet. But it can be a suggestion that that's an important low, and you might want to be a buyer. We're seeing a similar thing out. So it's going to make for an interesting session this afternoon, because we've got, on the hourly charts, the Dow has been selling off the market. So the market hits a low there, and the RSI is at a low. The market moves a bit lower again, and the RSI moves a bit lower again. And then the market in the overnight, is it the overnight market? Yeah, it's this morning. So the market's moved a bit lower this morning, but you can see here, our RSI has started trending up. So that's bullish divergence. So that can be a suggestion that maybe the weakness is running out of steam. So again, I think if you really were gagging to do some trades here, I think there's a couple of trades you could do. I think first of all, you just be a buyer, blindly buying into the RSI bullish divergence, and put your stop over this morning's low, or you'd be a buyer and put your stop back below this low here, or you could maybe be a bit more patient and see how things open up this afternoon and see if the market holds. But I do think the sell-off over the last couple of days is nothing really that drastic yet, and 18,450 is the big level to watch. Let's have a look on the 10-minute charts, see if we can get any more insight. There's divergence on the 10-minute. Oh, actually, there's not divergence because it has made a higher low there. So there we go. That's let's see. What did yesterday? I mean, yesterday was a bit of a boring day, wasn't it? But it did sell off, didn't it? So let's see what happens. So the trend over the last couple of days is still down. You'd arguably want to see it, I don't know, back above at least these early hours highs ahead of 18,590 to start shaking that downtrend off. So I don't think sitting on your hands and being a bit more patient about buying the Dow is not a bad thing, but I would be expecting it to move its way back up. Let's see. We'll see what the rest of today brings, and we'll see how that divergence plays out. And then FTSE, let's do that. I mean, the FTSE's pretty much the same, isn't it? The FTSE, let's have a look at let's look at the dailies first of all. on the FTSE. So we're not quite at all-time highs in the FTSE, but we're edging back to the magical 7,000 level. Magical for no other reason than it's 7,000. But like the DAX, like the Dow, these are strong markets. Any sell-offs don't seem to last too long. And I think if we're trading them, all we can do, is go with the sentiment rather than trying to be Johnny Smartpants and call the top. It's looked to be a buyout on weakness. And I think the FTSE, let's say 6,800 is the big FTSE level. August the 9th and August the 10th, we saw support ahead of 6,800. Currently trading at 68.80. So let's see again. Again, there's a space there for a bit more FTSE weakness. But I'd be expecting that trend to resume its way back up. And finally, gold. I think gold's it's maybe a little bit boring. But if we look on the dailies on golds, my outlook for gold is still the same. It's rallied, is it something like 20% odd this year? So if we look on the daily chart for gold, so we want that. If we took it from maybe this level back here, we have a definite trend in place there. So for me, any weakness on gold back towards 1310, 1270 looks like a buying opportunity. It's gone a bit quiet over the last month or so, but again, in the short term, you can see it's been well supported ahead of 1305, 1310. So I'd be inclined to still be a buyer on gold if we did see a 30 odd dollar sell-off from where we are now. And I think it's only if it starts to slip below, for me, that the 1270 levels fairly important because of the trend. But I'd be just looking at that sort of level back there, maybe about 1250 sort of area. So I think the trend for gold is undoubtedly still up. And I think that's it, isn't it? But I do think the interesting one to watch for the screen watchers amongst us is pound against the dollar over the next day and a half or so to see how it reacts after that move through the last couple of days' highs that we saw yesterday. The bigger picture for those of us who are going to be sitting on a beach looking at a market maybe once a day, I think is the Aussie dollar, because we've got that massive downtrend that's being tested. And for those of us who just can't resist to pick turning points in the market, dollar yen, because this level has been an important one, even though the trend's down. Let's see how it performs. And for stock markets, there's nothing at the moment to suggest we're not going to see more of the same. The weakness doesn't look like anything to get too excited about. It just looks like markets that have corrected after pushing out to all-time highs or multi-month highs. So I'd be expecting the strength to come back in. We'll see. We'll see what happens. But we'll wrap things up from there. There have been a few questions coming in. I hope I've managed to answer them, and the sound and the vision has all worked okay. Like I say, I won't be doing this again next week. So the next one is in a couple of weeks' time. Let me just flash up there. If you've got any questions, though, drop me an email. So it's david@tradeafter.com. I do put interesting charts and stuff on Twitter. So there's a lot of rubbish on Twitter, as I'm sure we all know. But I try and put, if there's any sort of big levels being threatened or stuff like that, I'll put them up there. And of course, if you ever miss any of these, you can watch the recording. So that's it for this week. I hope your trading goes well. We'll see how the markets pan out and catch back up with it again in a couple of weeks' time. Okay, we'll wrap things up for now.